Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah and let's try and assess how the situation looks today. A bit more uncertain than what it was yesterday, I must say. And remember, yesterday from an Indian markets perspective, it was a very different day of trade simply because we were very choppy. We started off okay, then corrected a bit and then bounced back. And even then we were volatile, but ended up at the high. Could today be different? That's the key question. Now, firstly, the news around the world. And I thought there are 2 or 3 interesting pieces of news, so quickly enumerate them. Pompeo stepped up the criticism of China, has eased off the Wuhan lab claim, and I think the Bloomberg website also shows how China is saying that Mike Pompeo has no evidence at all of the virus originating from a Wuhan lab. So that continues, but essentially what I'm trying to point towards that the exchange of war of words between US and China definitely continues. China, very interestingly, is considering dropping off the numerical GDP growth target for 2020 altogether. I mean, this virus, we've seen it all, haven't we? So this could well happen. What I think what is being reported is that China may instead be unveiling the upcoming National People's Congress later this month, a description of the goal for the gross domestic product growth. So they'll describe what they want to do or how they believe the GDP should grow, but no numbers. Can you imagine that? But that may well happen. Australia, by the way, is preparing to relax its lockdown on Friday. So it joins the rank of multiple nations who are willing to and wanting to do this. So let's wait and watch how that shapes up. But what about the markets? Well, yesterday and day before yesterday, it was the big tech which came to the party for US. In yesterday's session, in fact, the Dow and the S&P were marginally lower, but the NASDAQ ended in the green because some of the big tech companies doing rather okay for themselves. Asia, a bit of a mixed bag, more on the somber note. Keep that at the back of your mind. SGX on a somber note, though I must say SGX Nifty is not doing as poorly as it was at about 9:30 p.m. yesterday. We were staring at a level of about 200 odd points downside. We're not quite there, if you will. So that's the other thing. And frankly, if you just look at the other big commodity variable, that has to be crude, obviously you guessed it, it's just been so choppy. 5 days of an uptick. Yesterday had a big volatile intraday trade, ended marginally lower. This morning, as I look at the futures early morning, and unless I'm very wrong, they were marginally in the green as well. So lots happening in the commodity markets and crude in particular as well. So that's the other thing. Watch out. I mean, lots of articles around how uranium is now really moving up the gains as well. So pretty interesting stuff happening in the commodity space. What does all of this mean for India trade? Well, I think yesterday there was a lot of chatter about a stimulus package coming in, and a possible stimulus package is probably the only reason, to my mind, for the markets to move substantially higher from where we are right now. I fear, though, talking to dealers last evening, this morning, a couple of WhatsApp chats with a couple of other people seems to suggest that there could be an unwinding of the long positions built on financials yesterday if we do not hear any kind of announcements from the government side today. So yesterday we saw the stocks dipping. Bajaj Finance, for example, dipped all the way to 1970, 1980. From there, an up move of about 5-6%. HDFC Bank 3.5-4%. So the financials really went up in trade, and in part not due to the SBI decision, but in part also to the belief that there's some announcement or some relief package coming. If that doesn't happen, I fear the second half might be a bit might be a one-off unwinding. So do watch out for those announcements. Foreign institutional investors continue to sell. A small buy number from the DIs yesterday, and some key earnings to watch out for. HCL Tech is important one. RBL Bank is a very important one. Went up big time in trade yesterday. Let's see what that one does. ICICI Securities is the other interesting one to monitor. So we'll watch out for all of these. But the stocks that I believe would be the most important ones to monitor: Vedanta, the sale of over 1 billion stake in KN is said to have been stalled. This is as per Bloomberg News. Let's see if the stock already under pressure could see some more pressure. CLS has reiterated the stance on OMC's as sell rating on IOC, BP, HP. I must say the views out here are divided. There are enough and more people who believe that there is value in these stocks at the current levels that they are, because the marketing margins, even though curtailed, might still be good enough. So depends which way you look at it, but CLSA's view is that the sell rating is reiterated. They believe that the volume impact in the lockdown and the large inventory losses are forcing them to cut the EPS estimates. They believe that IOC could report a loss in FY20, which is the first time in 30 years according to their calculations. So interesting. Let's see what OMCs do in the session today. I think UBS has come on the buy note, by the way. As I said, mixed views out here on OMCs. Yes Bank, they released the numbers, and 81 helped them post a profit. The CASA ratio though dipped quite substantially from 33% to 26.6%. I mean, just laying it out, I don't know how easy or difficult it is to trade. The one and the most interesting one has to be HUL today. All the news is known. We put it out on our Twitter feed as well yesterday. GSK Group is going to offload 5.69% stake, 13.37 crore shares to be sold within a price range of 1850 to 1950 per share. What happens to the stock? Anybody's guess. I'm just laying out the valuations for viewers out here. At 210, which was the current market price yesterday, of the closing price, the stock trades at 54 times. At 1850, which is the lower end of the range, it's about 49 times. 1950, it's about 52 times. All of these below the 5-year averages, naturally so, because the stock has corrected so much in the last few, but the 5-year average is 57 times. So at 1850, it will be about 8 percentage points lower than the 5-year averages on the P multiple is HUL. The block I hear is fully subscribed already, or subscribed and closed. So the demand is obviously going to be there for a stock like HUL. Whether you want to buy it at 1850 or 1950 is a question. Maybe the supply overhang is gone now with this out of the way, and you never know. This could well be a stock that could actually see a near-term bottom in place after this deal is done today. Or the deal is anyways done, but once the stock opens today. So that's the interesting stock to monitor in this session. I'll just sign off with a piece of news that I thought was interesting. Finland did this. They embarked upon a socialism drive, and a study, they conducted a landmark study which showed that giving the unemployed free money, which they started doing sometime back in 2016, I believe. So giving the unemployed free money didn't provide the boost to the jobs market, but it did raise the happiness levels. Maybe this study boosts the calls for socialism even more. You never know. And I'm no one to debate what is right and what is wrong. I'm just laying it out, something that Finland did, which was pretty interesting. And then a study, a landmark study that they conducted, and the results thereof. Thanks so much for tuning into the Trade Setup today.